Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather. It's January the 26th, which is Australia Day, so happy Aussie Day to all the Aussies tuning in. Well, we had a huge week on both DAX and FTSE, and in this video, I'm going to go through the German stock market, the DAX 40 index. So let's go and check it out. So if you tuned into my last weekend's report, I got it totally wrong. And that's part of the fun about doing a weekend market update. I thought we got to an all-time high, it was a bull channel, and I thought there was a pretty good chance we'd have a pullback. We didn't pull back at all, basically 5 up days. What I did say in last weekend's report, at the end of the day, I've got to trade the 5-minute chart if that's my execution time frame, and that's what I did last week. On the one hand, my swing could have done better, but on the other hand, I've got to follow my own rules. So let's dive in. All right, so I've got the DAX 40 futures here on TradingView. I've got the FDAX, I've got the continuous contract, 20 bar EMA and a 200 EMA here. So I've got the high of last month marked out. If you look at where we are in terms of the big figures, we went right past 21,000 and we're currently sitting we closed at 21,000, nearly 21,500. Okay, so we went about 500 points past there. No, we've basically gone 900 points past there. You're looking at a bull channel and there's not a lot of bear bars triggering. We did have one bear bar triggered here. And so any bear that was short there was selling to scale in. You can see if I zoom in, a trader could have sold a prior high, sold a measured move of that signal bar up, and they could have made money. But when that monthly bar closed, if you're short, there's a real problem with your position. And that is you wanted, at a minimum, some kind of bear bar to have more bears selling. Now you've actually got the minimum follow through on that monthly bar. So if you put an order to buy the close of that bar with a stop down here, your target is now at around 21,000. I think that's what's happened on the monthly chart. If we go to the weekly chart, now I got it wrong last week. I thought we were at the top of a bull channel and there would be traders looking to take their position or part of their position off. And that's one of the ways to trade a channel. Here's the moving average. So I said last week, you put your channel line along the moving average. You can also measure a bull spike. You could use this one, you can use this one, or you can use this one. And then your channel is going to be in line with that spike. So if you use this spike, that's your channel hitting that bar. If you used this bull spike back here, this was your channel, we broke out. If you were using this spike, we've definitely broken out of that channel and now you're looking for a measured move up and we reached the midpoint. So this is one way you can use spike and channels for projections. If this was your spike and this is the channel, then maybe you get a measured move up. That was your midpoint. Or if some traders are going to use the latest spike, then that's what your projection looks like. Doesn't matter what you use. All that matters, I think, is that you match your orders and your stop position and your take profit with the price action that is happening. So what do you do when a bar closes on its high like this in a bull channel? Well, this is another always in buy signal. So for traders that bought in this channel, which it was reasonable to do, you've got a spike to a new high here. You've got pullback, one, pause, second leg of a pullback, and then another pause. This is a form of a high two. It's not a great looking high two above the high of that bar, but it's a reasonable buy the close, or you're waiting for evidence for this bar to go below or to shoot up. Al says if you're trying to get long in a bull channel, your other option, if you don't buy a high one or a high two, that high one never triggered. That high is 2180. That high is 2166. So actually the high one did trigger here, which makes it a high two. So trying to buy in here, trying to buy near the moving average. Otherwise you're long one tick above that high. If a trader this weekly bar here around 20,500, their target is 21,800. Other traders might look at the measured move of the pullback, and that's where we reached. The other way of saying that is anyone that got long here, their actual risk of the swing position was this much and projected up, and that's where traders got out. So there was a buy the close here, high one here, or a second entry signal here. Either of these are going to work for you, or you're long here. That's your entry bar. So the last bulls to enter on that pullback bought the high of this bar, good looking entry bar. A bull that bought this bull bar here is looking for 21,900 up to 22,000. So I had a swing position on the daily chart and I was taking profits at this new high, and I was looking for a pullback to enter. And what I'm going to do is go down to the daily chart, and you can see how that panned out. So now I've got the daily chart. I've got the 24 hour for the DAX 40. You can see the high of last month. We closed above that high, which is a buy signal. Traders need a minimum amount of follow through. The pullback did not overlap in terms of a close. So bears were not able to close back in this range. And if we're not going to go back in that range, other traders saw this as a potential measured move target. The furthest part of this pullback and the prior high, and they're one-to-one. If I change that to values, so the high of that bar is 21,635, and the measured move is slightly above it. So it's actually slightly missed the full measured move of this total range. Other traders will use, they see this and a double bottom, and they're going to use the higher low here and either use the top of the breakout or the bar that closed. So if you had a more conservative measured move, you hit your target and you had a close, and so you're looking for reasons to take profits on that trade. And that's the fundamental difference between using support and resistance to exit your trades and using signal bars to exit your trade. So going into the week, 1, 2, 3, 4, 5, this was Monday and this was Tuesday. So Tuesday is an inside bar, and this is basically the pullback to get long. And so when you're looking at this chart, where's the biggest gap? This is the biggest gap here. Traders saw this spike. The pullback was an inside bar. That ends the first part of the spike. You've got a 70% chance of a second leg up now. And this was the gap up and follow through. So even on the daily chart, you've got traders bought the close of that bar. I don't think they got above the high of that bar. No, that makes sense. Another projection is to use the middle of that gap and use a swing target. So if a trader, and I'm going to zoom in on the intraday chart so you can see that. Now you've got a spike and a pullback, inside bars, the end of the leg. Traders were buying here for that target. So if I now go down to the 5-minute chart, another way for measured moves is to look at where the pullback is. Here's a higher low. Anyone buying in here, that's the edge of the pullback. There's a chance that whole range is going to measured move up. Now, this is obviously much easier in hindsight. So what do you do if you're looking at price action here? We're on the 60-minute chart just to take a look. Traders that are buying in here have a final profit target up there if it's going to work, but they're probably using ranges in here. So if your stop is at the bottom of this spike and you're long in here, you're hoping for a measured move. It might be the smaller range. It might be the larger range. So that's the spike and that's the pullback. So that's another way to measure potential targets. So I think we've hit some measured move targets this week, and now we've got a bear bar, but this is a bull micro channel. So the first reversal of this is likely to be minor. This trend line is tight. There's probably buyers below the lows of these prior bars. This was an inside bar here, which is around about the 21,000 big figure. And so we can still keep going up. But if this is the spike and the start of the channel, then the start of this channel is a magnet for the bottom of a trading range. So still always in long, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's a 9-bar bull micro channel, which is incredibly strong. But also you don't see micro channels go much past 6 or 7 bars before they have a pullback. 1, 2, 3, 4, 5, 6. Even though there were 2 more bars here, we went sideways for 5 or 6 bars and then a 50% pullback. Traders that are buying here have got a very wide stop. The question is, a trader's going to buy to go to 22,000. Or if I put 22,000 on the chart, if you're going for 22,000, the low of the last swing point is there. It's a breakout on the monthly chart. A trader that is buying here and putting a stop below that channel is betting on 22,000. But bearing in mind, this was the prior swing point that we broke out of and we came back to test it. This is a prior swing point here. I don't think it makes sense to have a stop there. You probably need a bull bar that's a little bit lower. So if there are swing traders, they're probably looking to buy around 21,200, looking for 22,000 as their final target. So always in long, bull micro channel on the daily. So cash index 21,000 is here. On the cash index, the 21,000 figure is here. We had an outside bar. This is the start of a trading range. This is the spike, pullback, and the channel. If that's the start of the channel, I think we need to come back to 21,200 on the cash or into the lower third, which is 21,100. If we do the same exercise on the futures index, 50% pullbacks, 21,300, or pulling back into that gap. Two-legged pullback and then continuation. Well, thanks very much for watching. I hope you found that valuable. If you're in the Books Price Action trading room, I'll be trading live Monday and Friday this week, so I'll catch you then. Otherwise, you're welcome to ask me questions in the comments or send me a message on the Discord. For everyone else, have a great trading week, and I'll see you next weekend. Cheers.